What's going on, Moon Gang? I'm a boy from Bulgaria, and I'm here to teach you how to lose 3 billion, that's billion with a B, dollars in one day. I'm here to talk about what's going on with Robinhood, and I know many of us already hate Robinhood, but I'm here to share my non-financial advice opinion why it's actually a horrible investment. Emotions aside, I want to run you through the numbers so you can better understand really what's going on. Today, July 29th, Thursday, Robinhood IPO'd at $38, quickly ran up to 40, crashed to 33, then came back up, was rejected at its opening price of 38, and came all the way down as I'm filming this at $34.90 in post-market trading. When it debuted at $38, that means that Robinhood had an evaluation of $32 billion, but as of close today at $34.82, it was valued at $29 billion. So that's how you could just be a boy from Bulgaria and lose $3 billion in one day. So I want to be balanced in this, and I want to run you through the pros and the cons of what's going on with Robinhood. So there are some interesting things to learn about this. First of all, it is growing in terms of revenue and users very, very rapidly. From Q1 to now, it's gone up from 18 million up to 22.5 million in just from Q1 to Q2 of 2021. And from Q1 to Q1 of last year, that's 151% growth. So right there, its user base growth is honestly pretty impressive. In terms of revenue, also impressive. So from Q1 of this year to last year, it has gone from 128 million all the way up to 522 million, which is very impressive, 309% growth. And then for Q2 last year, 244 to this year, around 550 million estimated. That's about 100% growth, also impressive. However, it gets a little bit deeper. Robinhood expects to swing a net loss of about 500 million for this quarter that we're in, so that gets rid of that. And from there, we have impressive user growth, impressive revenue growth, and that I see why it has such a lofty valuation, but I want to get into why I don't think these things will last. So first of all, user growth, there was a gigantic retail boom, and that is not sustainable. I don't think they're going to continue to grow at this rate of huge jumps in its user base. And in fact, I could even see a situation in when it starts to decline, because as this new retail trading public learns more and more about the market and how it works, I think they're going to start to realize, not even just emotionally, but factually, why they hate Robinhood. And it really kind of comes down to payment for order flow. So in Q1, out of this, $522 million, 331 million, just over 60%, is for payment for order flow. For those of you who don't know what payment for order flow is, it's a relationship between a broker, i.e. Robinhood, and a market maker, such as Citadel Securities. And basically, the market maker is sending money to the brokerage, and in exchange, they're routing all the orders to them. Now, this is where it gets a little bit interesting. This is testimony from the chairman, Gary Gensler. This happened in May of this year, and it was in front of the House Committee on Financial Services. One thing I want to bring to your attention. Robinhood explicitly offered to accept less price improvement for its customers in exchange for receiving higher payment for order flow for itself. As a result, many Robinhood customers shouldered the cost of inferior executions. These costs might have exceeded any savings they may have thought they've gotten from zero commission. Now, if you're familiar with the mythological story of Robinhood robbing from the rich, giving to the poor, this right here, it's telling me that they're doing the exact opposite. You know, I don't think they can go on much longer treating their customers this poorly and expect to run a successful business. It's literally the antithesis of the name of the company. They are not robbing from the rich and giving to the poor. They are robbing from the poor and lining their own pockets with it. Right here, this is testimony from the SEC chairman. I think because of this, its user base is going to decline because more people are going to realize that, hey, I could just trade somewhere else and not get completely pulled over the coals. And on top of that, it gets even worse. If you look at this new bill, HR 4617, this is currently in front of the House. It's just a bill, not in law yet. they're looking to actually look into payment for order flow. Right now, PFOF, it's actually outlawed in the UK, it's outlawed in Canada, and depending on the findings from this inquiry, they might outlaw it in the US. So not only are users going to get pissed off at Robinhood, but the users that decide to stay, right there, that money that they're getting, 61%, 63% of the company's income in terms of their revenue, that could disappear. So as a business model, their business model is relying on something that literally might be outlawed. So right there, to me, that's a double whammy, and the risks do not stop for Robinhood. We know previously in this year, they were fined $70 million, which was the largest FINRA fine for systematic failures and significant harm suffered by millions of customers. Are you seeing a pattern here? They treat their customers like crap, but honestly, it gets even worse. We know that the Fed seized Robinhood's CEO's phone. That's Vlad. So we don't know what's going to come from that. There are various federal and state cases still going on as I'm filming this video, levied against Robinhood. Still many legal cases. And in fact, right before the IPO, Robinhood says it's under new investigation by FINRA days before the IPO. And this happens, the agency is seeking information related to the fact that Robinhood CEO Vlad and the co-founder Bot are not licensed by FINRA. Honestly, this sounds bad. They just might force them to get licensed. But my point is, FINRA is still clearly going against Robinhood. They're seeking as much information as they can. It seems like they're not playing nice with Robinhood. So FINRA has it out for Robinhood. They treat their customers like crap. The customers are starting to learn that they're being treated by crap, and their main business model, payment for order flow, there's a chance that it actually gets outlawed in the US. So overall, I get emotionally we hate it just because it stopped the trading, the buying of AMC and Genie, like other brokerages, let's be fair, in late January, early February of 2021. But truly as a business, I think it's a matter of time before people really start to realize that they're being treated like crap. So they're going to leave the platform. And then on top of that, I think it's too big of a risk. If it is one day announced that payment for order flow is outlawed, I just don't think people are in no way going to be happy with Robinhood because its business model, a huge chunk of it will disappear. But overall, don't forget, these are just my opinions. I am not a financial advisor. I implore you to do your own DD, but I would love to get your thoughts on Robinhood as an investment in a comment below. And until I catch you next time, from me and Chair, best of luck in the markets.